Oops. Are you able to talk, Paul? Yeah, I think I heard you.
Hey, Travis, can you hear me?
I can hear you.
Okay. I gotta mute it.
Okay.
A little bit later.
Yeah, it wasn't true. I don't see the controls for letting people talk, so it looks like you're able to then, so that's good.
Yeah. I'm using a new tablet, so I gotta figure it out.
Yeah.
Yeah. Let's see where it's at.
Do you use tablets a lot, or you just starting to use them?
Actually, I just started using it. Yeah, just this week, actually.
Yeah.
Yeah.
Still trying to get used to
I got it.
I've never gotten into the tablets that much. I know that they're definitely handy, but I don't know. I just use a laptop all the time.
You know what? Yeah, it's the same thing. But I bought a keyboard for it, and it works just the same. It's just smaller. And I can carry it around a little bit more, and
yeah, yeah, that's true.
Yeah,
they're a little more convenient that way for sure.
Yeah, they are.
And then you always have service too. You don't have to, worry about Wi-Fi or hotspots. If you have the data on it.
Yeah, that's why we got it too, because of the data. It's just it's got its own so to hook up to Wi-Fi, whereas the other tablets you have to. It's just easier.
Yeah. Plus, you guys have been kind of traveling around a lot too. It seems like, so probably convenient for that.
Yeah, it is. It was helpful this last week, for sure.
Yeah.
So,
how's it going, Paul?
Tired.
Yeah.
Exhausted. I flew back yesterday.
Yeah.
Was in the middle of a damn rainstorm, but I loved it.
I was picking up our foster kid yesterday from school. It was like 4, I don't know, a little after 4, and it had just started dumping rain at my house. And I'm sitting at I have to exit. I can only turn right out of my neighborhood, and I have to go down to the next street and do a U-turn. And so I'm waiting to do the U-turn, and this kid was leaving school, the high school, on a bike, and he started to leave the light turn so he could cross the sidewalk or the street, and he kind of stumbled and fell on his bike and dropped his phone, and he's in shorts and a t-shirt and just not even prepared, and it's just dumping rain on him, and he's just in the middle of this intersection having a rough time. I was like, oh man, I feel bad for that guy.
Well, we were in the stadium and it was just pouring. But
yeah,
people didn't care. There was people with no shirts on, and
yeah, it wasn't cold.
It was cold there.
Oh, was it? Yeah, it wasn't cold down here.
I was in the Bay Area, so
yeah, it probably was cold then.
And then we were at the game didn't start till 5 o'clock, so it was the last game of the day.
Yeah, so it's definitely cold then.
And then we lose the boot, so but it was okay. I didn't care.
That
Win,
wasn't
lose, or
good.
draw. We were there.
I had some points on you guys.
That's good. You play fantasy, huh?
Yeah, a little bit.
Yeah.
So yeah, I lost a couple points on you guys.
Oh man. A lot of people lost a lot of points.
Yeah. Yeah.
They were supposed to win that game. I said, how the hell can you lose to the Colts?
Really? I know, that's what
I mean, you know what? It comes down to coaching. I mean, Shanahan, they figured him out. And then, he's got a great first half playbook. And then what does he do in the second half? He's been doing that for the last couple of games. It's like I don't know what he's doing. I do not know what he's doing.
Yeah.
Well, we have several names that are very popular in here.
Yep. What time is it? 9. All right. So Dean's not going to be able to get on. Not sure if Andrew's popping in or not. So I know we saw, just to kick it off real quick, I know Natalie sent out a somewhat untactful email the other day about the processing fees and stuff like that. Looks like she's bumping them up. I don't know, extra work fee or whatever. So, we're still looking at some different options there. I'm talking to a couple different processors so we can keep those costs down. Let me get Andrew on. I guess not. So just, if you want to continue working, Natalie, that's fine. But we are, like I said, I'm looking at some alternatives for that. So I have a couple that I'm talking to because the fees are a bit high, and I hadn't even talked to Natalie about that, so I was a little perturbed that she sent out that email without even, running things by me.
Yeah, that should have been discussed.
Yeah, so
Yeah.
I actually haven't even talked to her in a couple weeks, so that was kind of unbeknownst to me and a little aggravating as well. So other than that, so I'll keep you guys posted on progress with some alternate processors. If you guys have any referrals, I know Paul Coronado that you have, that your processor. I don't know how busy she is right now. I think she said that she had a couple brokers that were taking the year off or something, the rest of the year off. So she had about a 3-month window where she could take some extra biz, but I don't know if that's still true or not. So I'd have to circle back with her. So
Yeah, the fees are a little bit harsh.
yeah, especially the extra 500, and I don't know. The whole thing was just weird.
And that's up front.
Yeah, like I said, the whole thing was weird. So
Yeah, that was something. Yeah, I don't understand that email, but yeah. But
she's just
we
kind
do
of
have to look at our
deteriorated
different
as the
options.
years gone. What was that?
Yeah.
What was that about, sir?
Yeah, we have to look at our different options because we can't just have one processor.
No, we need a couple options here. So we're just all getting a little busier, and the volume's getting a little higher. So we definitely need some additional options. So, and then I know you had someone, but they weren't licensed. Is that what it was?
Yes, I
Or-
do have someone that's not licensed.
Okay.
But I'm gonna probably use her as my assistant and just have her work that way.
Okay. So, and I have another option for that as well. Same kind of setup though. Like you'd have to pay her out of the pocket. So you want to be able to charge a borrower.
I'm just
Right.
curious, how much are you guys paying as an average for third-party processing altogether?
Well, she was $9.95,
Okay,
which is kind of
Average.
the going rate I'm seeing, but yeah.
yeah, that's the California one for some reason. And then the add-ons that you were talking about, like what kind of add-ons are you talking about? Like non-QM kind of stuff, or
Basically an extra work fee for $500 to handle some extra, file prep, I guess. So, but she raised her fee up to $13.95, plus she wants an extra 500.
holy smoke.
Yeah, I was like,
Yeah, that's
I don't know about that.
Since the outlaws are making all this money, she says.
I know.
That was the line that really got me. I mean, this is the line of
She's
work.
been
she
a
got
processor
into.
for 20 years. What's up with that?
Yeah, nothing has changed. So
The extra work fee of $250 is customary. But that's usually like, hey, we will do all the dirty laundry for you from A to Z. Then plus the processor will do the extra work. So I don't know how extra you can get, but yeah, I mean, anyway, sorry.
I wouldn't mind the extra work fee so much if her fee didn't also go up for the processing. So, I'm totally willing to pay someone some extra money to do some extra things because I'm busy or whatever. But it was way too much, and it it wasn't a very tactful email, and she didn't discuss anything with me previously. So it was just, I didn't appreciate the email. So
I'm just curious. Who was this
Yeah.
processor?
who?
Who was the processor? The first
Her
name?
name's Natalie. She's just third party.
Oh, this is the one that you had for a while, right?
Yeah, we've been using her, but she's been kind of deteriorating throughout the year as far as
Got it.
communication and stuff like that. Like, she's very knowledgeable, and I'm not saying that she isn't good, but she is not good with communication, and she's been
Got it.
slow. So that's been rough.
I hear you. I hear
But
you.
we'll move on from that and let Paul kind of start in. So, what do you want to cover today, Paul?
Okay, awesome. Thank you very much. The one thing I want to make a comment on what you guys were just talking about is there's several different types of processors, and some processors will step in and go, okay, this is how I want to process. This is how I want to process. And they're going to be like, okay, this guy or this broker or this company, their files come in messy. I really don't want to deal with them. Or they're going to slap them extra fees without talking to them, and hopefully that they'll go away. But the communication should be there. Hey, so I have all this extra work and this and that. I'm going to have to charge extra fee for that. They should have done that upfront. A good processor. And unfortunately, then you have the processors where like, oh yeah, don't worry about the extra work fee. I'll charge you $8.95 or whatever. Those are the ones that are typically slow. They need the business. They're learning the business. They need the volume. So it's kind of hard to find a medium, especially at this time of year. I would guess that, I don't know, every year it's different. I would guess that at the beginning of next year, you probably could find the processors that you're looking for because maybe they're tired of the previous broker, or they left the company, or they got fired, or whatever it is. It's just always been like that. At the end of each year, everything just goes crazy, and then things tend to slow down, after the Christmas and New Year's holiday.
Yeah.
Right.
And that's how I took the email, is that, here's my fees, take it or leave it. I took it as she doesn't necessarily want to, have our business anymore. So
That could sound like it. Now,
yeah.
With that being said, I'm going to share my screen. Now, who is this iPad 2? There's no name on it. I don't want to call him iPad 2.
Oh, this is Baltazar.
Okay. All right. Got it. Okay, I'm going to share my screen. Can everybody see this? Check this for news item.
Yep.
Okay. Sorry, that was my dog. So I was asked to get some kind of checklist to help you guys and gals what to look for in documentations and what to have in the file. Majority of the things in the file before you push the loan into processing, ideally before the loan goes into underwriting. These are just general ideas that, in general, what they're going to probably ask for. So, and I'll make sure I'll forward this to you, Travis, so that way you can forward it to everybody.
Yeah, and I'll put this in the back office for everybody too, so that we can I want to be able to work with any processor. So if we can on our end know that we need to do these checklist items, and then boom, hand it over to processing from there. I don't think we're going to have any issues moving forward with most processors.
Got it. Okay. So IDs are very important up front, and I'll tell you why. If someone's inputting an online application, most of the time people just put like their first and last name. They don't put maybe senior, junior, if there's any, or they don't put their middle initial or full middle name. And where I'm going with that is, if the customer is doing a refinance, everybody's got a different name. Sometimes they'll put full name on there, or if somebody's buying a house and they don't tell you that they're putting in a trust or whatever it is, what's really important is that you look at their ID and you compare the ID to what you're putting in the system. Mobile notary some mobile notaries are very picky. So if someone would, do a mobile notary, and notary will say, let me see your ID. They see the ID, the first, middle, and last name. but something went wrong. Maybe there's no junior, senior, maybe there's no middle initial or middle name. Sometimes the mobile notary won't take it. So it's really important to have this up front. On top of that, if for whatever reason the file has to go back to underwriting just to fix it, the underwriter is going to say, oh, there's no middle name or senior, whatever it is that's missing in the system, they're going to make you repo credit. I learned this lesson like 10 years ago. And if you have to repo credit, you want to hope that the score didn't go down, basically. So it's really important upfront that you get this information. Social Security card, not necessarily required, but sometimes documents are, sometimes the customer puts the wrong number in there. So it's important to have that. Or several years ago, I had a client who came back. It was a different Social Security number. He came back on the master list of Social Security that he was listed deceased. And it was like a mess. And we had to fix it. So those two items are really important to have in front, so that way you can iron out any potential red flags at the beginning, not in the middle or at the end. You got borrower information. Okay, income calculation. I don't think I showed you this before, but I'm going to show you this. That way you can explore it, and then maybe at a different time we can fool around with some numbers on these. I have a website. Let me find it real quick. Self-employment. And I'm going to put the web address on the chat box. Okay, web address is in the chat box for your records. Self-employment calculation. You know, you can kind of go here, plug in numbers. It actually calculates it for you in general. That's a good sheet. There's a bunch of other calculations that's available. I haven't explored the whole thing, but this is something that you could explore, where you could input numbers, it calculates it for you if it's self-employed, you know, things like that. There's a lot of information in here. Especially,
this is a free tool?
Yeah, it's a free tool. Absolutely. Okay. It's something that I found a few months ago, and I think it's really cool. And once the underwriter conditions a file, if it's self-employed, if you remember, the underwriter will condition like year-to-date profit and loss statement. They'll ask for that. You know, if they have that here, you can calculate it as well. There's all kinds of stuff in here. It can be overwhelming, but it's there. It's not necessarily to have it in a file, but if you have it in a file, and if there's a miscalculation somewhere, the underwriter or somebody will come back to you and say, hey, how did you get this number? Or it'll say, yeah, we can't include, for example, Schedule D because it's not a consistent income, so they'll remove that income. You know, there are things that you can go back and forth on. And to be honest with you, when it comes to income calculation on self-employment, that I want to add is 90% of the time, the underwriter will have a different figure than your figure. Like usually it's slightly up, slightly lower, unless there's a drastic change. That could be anything. Okay. One thing I want to add is if somebody's receiving like Social Security income or whatever, you can gross it up as long as it's not on the tax return. In other words, as long as they're not paying taxes on that. I know it sounds kind of strange. It's always been like that. I don't have the answer why they do that, but if it's not on tax return, you can gross it up. Bank statement. Okay, this is the tricky part. The average lender will ask you provide the recent 2 months. But when it comes to retired people or people receiving some kind of monthly income that's not from work, sometimes in a lot of cases, they're going to ask you for 3-month bank statement showing the direct deposit, a consistent direct deposit in those bank statement. They will count those as verified income that they'll sign off of. It's a little bit different. You also have to ask in the bank statement, is DU asking for reserves, or is it a non-QM asking for 6 months of reserves? You know, you want to pay close attention to what bank statements you're giving. In here it talked about the earnest money deposit or earnest money withdrawal. 99% of the time, I don't even worry about that till the initial conditions, only because when you're submitting the file, if somebody got the accepted offer, that by that time, a check hasn't gone through or came out of the bank account yet. So just general stuff from bank statements is fine if you just want to provide 2 or 3 months, depending what the DU is asking for. The detailed items like large deposit, is it sourced? Is there a lot of explanation needed? That stuff I don't worry about until the initial conditions, because if you provide every single one of these information to the underwriter, that you don't want to give them everything that you think they might need, because what if they don't need it and they see something that is going to decline the file or raise a red flag on something? You want to be really careful when it comes to that. So bank statements, just worry about 2 to 3 months. Unless it's requiring reserve, you want to make sure there's enough reserve in those bank statements, or maybe you want to provide the recent quarter 401k statement, things like that would help. As I'm going through this, visualize in your head that you're going to stack these in order. That's how underwriters love it. Processors love that. In their brain, because if you're from like the 80s and 90s where everything was paper, that's what they usually do. They stack them in order, the income, bank statement, and all that. Pay stub. Okay. In general, you want to provide the recent 2-month pay stub. Of course, you want to take a look at it just to see if there's 401k deductions. And what I mean by that is like sitting right here. If there's any 401k deduction, you'll want to make sure you ask the customer, oh, by the way, can you provide the note that you borrowed money against your 401k? But technically, that 401k loan does not need to be counted against the debt to income ratio. And there's a reason why for that. It's because it's secured. It's like if you stop paying it, the company will take it out of your 401k account completely and it's paid. That's how underwriters look at it. And that's a general Fannie and Freddie FHA rule. Non-QM, I don't know. Every company is a little bit different. It's really important when you're asking your client, married, unmarried, or if you have them do an application and you review it, and they say, unmarried or whatever, you want to ask them, hey, I saw that you put unmarried. I just want to confirm, or is there a divorce decree involved? Is there any child support involved? Things like that. If there's child support involved, ask them to forward you the child support paperwork, which would be included with the divorce paperwork. And you'll want to make sure when you say all pages, you tell them all pages, you explain it. If there's like page 9 missing or page 10, and it says intentionally left blank, you want to include it because it will get conditions. I guarantee you that. And if the underwriter missed it at the end, when they go through quality control, if they see it, they're going to spit it back and say, oh yeah, we can't provide a CTC. We're missing page 10. So you be careful when it comes to that. Other types of income, like Social Security. If somebody's getting Social Security, you want to get the award letter, they can just go online, download it. That's pretty easy. We talked about divorce. Trying to think if there's anything sticking out. Oh, here's important. This is an important one. Okay. Child support, Social Security, the child actually getting child support and or Social Security disability, you'll want to make sure that they're going to continue to receive it. What appears to be continue to receive it within 3 years or 3 years after the date of the document. And what I'm referring to is if it's going to end at the age of 18, you want to make sure that they're not beyond 15. So if they're like beyond 15 years old, then you can't use the income. So they got to be 15 or younger to use that income, just so you know. Tax return. Okay, this is the tricky part. Not all files require tax returns, so you want to be really careful about that. Say you have a borrower that said, oh yeah, I work for Boeing in Long Beach. I make a salary of $200,000 a year. And you're looking at a pay stub, it's just straight salary. They're you know, nothing showing up in their pay stub, nothing additional showing up in their pay stub. You still want to ask for the tax returns only because you want to see if there's anything else that could be a potential red flag in the tax return, just in case if the borrower or if the underwriter asks for the tax return. Why would the underwriter ask for it? Maybe at the beginning when the initial disclosures go out, the borrowers are signing the 4506T, which is a tax transcript. They renamed it as something else, 4506 something, I don't remember what it is. But you want to make sure that you get the tax returns up front, just for your record, to see if there's anything in there like, are they lying? Did they leave anything out? Let's say, oh, there's a Schedule E, there's a rental property in, say, Palmdale. You can ask the client about that. And she's, oh, yeah, we stole that one. Perfect. Can I have the final settlement statement on that so we can prove to the underwriter that this was sold, because it is going to show up. It's going to show up somewhere. Let's see, what else is important? I'm seeing this coming up more and more often. If somebody owes money to the IRS, obviously there's got to be a payment plan in place. In general, conventional loans, they can have a payment plan. FHA, they require it to be paid. That's the two different. Maybe the other way around. Double check that. On one of them, if there's a payment schedule, I know that FHA does not allow you to catch up with it. In other words, they want proof of at least 3 payments have been made on the IRS payment agreement. And that's something they're going to be really careful when it comes to do. And again, non-QM could be different. They might oversee it or overlook it or don't care about it, depending on the borrower profile. We talked about self-employed, common sense to your tax return for personal. If it's if they have an LLC or S Corp or C Corp or things like that, you want to make sure that you get 2 years of the business statement or the business tax return, because it's going to go together with the personal tax returns. Common sense, you know, you want to get the recent homeowners insurance, you know, included in the file, just the homeowners policy. And then what will happen is when the processor picks it up, she will reach out to the homeowners insurance company to have the mortgagee clause change. The underwriter will additionally condition for the homeowners insurance to update and reflect to the property that they're buying or refinancing. The HOI, that's something that you don't need right up front. You should need the policy. The policy is totally fine. You want to look at the policy to make sure that the monthly payment is going to match. Of course, if it's a purchase, then obviously you're not going to need the homeowner policy right up front, but you'll definitely want to pad what maybe the monthly insurance is going to be, you know, in your location, depending, every market different. Like the ones in Big Bear, I'm always doing 125 a month. Some areas down here in Irvine, I'm seeing 90, 80. Temecula, I'm seeing different. New home builds have a whole different policy. In some cases, I'm seeing it usually they're lower depending who you go with.
Can I interject real quick on the insurance?
Yeah, go ahead.
So I had a file recently. It actually wasn't my file. It was a agent of ours. And I was trying to keep this deal together because it was just exploding.
Oh.
And we're dragging this thing along, and come to find out, the homeowner had gotten their a notice from insurance that they were canceling their fire hazard.
This was a refi, I'm assuming, right?
No, this is a purchase.
Oh, okay.
So they already had, their fire insurance there, but it was being canceled by the insurance company. They weren't going to renew it. And so they didn't tell the buyer this. And while we're going through underwriting and this and that, it got conditioned for fire insurance. And then all of a sudden, we couldn't get fire insurance anywhere. It had to go through the state fund, which delayed us by about 5 days because they're slow. So I've been kind of telling people that if they're in these high fire line areas, to get their insurance actually quicker, their insurance quote quicker, and not wait until the last minute, because if it has to go through state fund, you could be delayed another 3 to 5 days because they're slow.
Easy.
Yeah. So that's something I ran into kind of recently. It was a little earlier this year, and it was just a nightmare files. But
You
that was
said it
one
was
one of the problems that we ran into.
No, could you say this was a purchase?
This was a purchase, yeah.
So which property they were being canceled out on? Was it like one of their own properties that's on like on the REO, or?
No, it was just a regular sale, and the homeowner, he didn't disclose that he had received this notice from his insurance company that they weren't renewing his fire insurance. So as we were going through the process, there was a lot of issues on the lending side as well.
Right.
This wasn't our lender, it was the buyer's lender. The whole thing, it was just a nightmare file. But yeah, that was like another thing that delayed us like another 5 days, because all of a sudden the buyer's like, well, geez, I got to get fire insurance now, and I can't get it anywhere. And so they had to go, apply through the state fund.
That's a good point. No, you're making a valid point. Usually when they're being canceled out, by law, they have like advance notice. Maybe the customer didn't see the mail or just oversaw. And of course you want to save your own.
That was his excuse. Oh, I didn't see the mail, but he had received notice.
Like,
yeah.
I don't know, 2 months. I don't remember, but no, you're very right. So, I mean, yeah, if you can get it, yeah, that's something you got to combat. At the beginning, make sure you get the copy of the policy. Look at the policy, where they're at. I don't think, I could be wrong. I don't think they would cancel in the middle of the policy. I think they usually say, sorry, we're not renewing you. So you want to look at it.
Was not renewing. Yeah, it was not renewing.
And so that, you're right. So the underwriter may condition go, oh, this is being renewed next month or 2 months. We want a condition for the updated, whatever it might be. So yeah, that's a good point. So you want to look at the HOI just to make sure you have plenty of time to do that. That's a good pointer. Absolutely.
Yeah, or if the home's in a high fire line area, just be prepared that they may have to go through state fund, and it's going to take extra time to get that.
Yeah, that's Cal Fire or no. But I know
pretty much everything's in a high fire line area now. So
right. Okay, this is a big one. Let me just see. Okay, I think we can cover this one. So let me just look. This is a very big one. Okay, so when you're pulling credit, you're looking at the FICO score. One of the things that when you look at the credit report, it's really important, is check and see if there's any trade lines that are currently under dispute. I think it will say currently dispute, or it'll say something like current or whatever dispute, or this item currently being disputed. Now, if it was disputed, it will say this was disputed, creditor, borrower, don't agree, or whatever it is. It'll give you like an initial comment. So anytime a trade line is being disputed, the credit bureau automatically take that account out of the calculation of credit scoring. So let's say if somebody, for example, has a 620 FICO score. And you're looking at it, it's not counted. You have to go back to the customer, tell them to remove the dispute if they want to close the deal, because the underwriter is going to say this needs to be removed. The scary part is, once you remove it, that could make the score drop or make the score go up, depending on this criteria. So first thing you want to look at, are there any dispute? If there's a dispute, they have to get it removed if they want to proceed with the deal. Now, I'm not telling you to go make your customer remove it. There might be something on there legit, like, this is truly not my account, or this is not right. I don't have 5 rates on there. This shouldn't be right. Then that's a whole different story. Because you don't want to be caught in the middle of if there should be a litigation in the future. I'm just saying, you want to like say, hey, we really can't go anywhere until this is removed because your FICO score can affect the program. Yeah, sure, you can submit it. The underwriter can say, okay, now we're clear to close. Well, they wouldn't issue a clear to close, but they would say, oh, this is all I need to issue a clear to close. There's a dispute on the trade line, need to be removed. You go to remove it, it dropped the score, and if it dropped to 619, then you're out of luck. Because right now, conventional, well, in general, conventional is 620 FICO score. But Fannie Mae just came out with a 580 FICO, which is a whole different story. So I just wanted to point that out. That's really important. If somebody, yeah. Oh, okay. So if somebody is married and not going to go on a loan, so I'm married. If I'm like, okay, my wife is not going to be on a loan, maybe whatever, for whatever reason, she's not going to be on a loan, it's just going to be me. When it comes to the state of California, FHA, VA, and USDA, they require you, even though you're only one going to be on the loan, maybe on the purchase agreement, maybe on the title, because we live in the state, or they live in the state, community property, we have to pull the white credit report separately, and then just add up all their liabilities together and put it in one slot in the liability section, and you put non-borrowing spouse, and they have to calculate that into the debt income ratio. So you definitely, that's something you want to do upfront. Conventional loans you don't have to worry about. I believe non-QM, they don't care, but then again, every non-QM is a whole different animal. So you want to pay attention to whether they require that or not. If there is bankruptcy in the past, just ask them for all the bankruptcy papers and the discharge papers. That's important. What else is if they're in bankruptcy, this is important. If they're in bankruptcy, they're like on one of those payment plans. I think it's Chapter 13. Some programs will allow you to do a loan while you're in the bankruptcy program, and they'll last for maybe 12 months or 24 months on-time payment. Keep in mind that the bankruptcy court has to approve that. And right now, I believe the court systems are taking a while. So you want to be careful when it comes to locking the interest rate. Yeah, you can have the file ready to go, but if you're waiting for the trustee, if you're waiting for somebody that is going to take a while, just don't lock the rate because you don't know what the outcome is. Appraisals, I just want to cover. I said this in the past. There's different opinions and politics associated with it. I wouldn't lock the rate until you actually. Sorry about that. I wouldn't lock the rate until you actually get the appraisal back. I had somebody that I know that was really excited about the loan. They locked the rate and went to order the appraisal after the customer signed the initial disclosures. And because of this property, this is somewhere, I don't remember if this is Colorado or wherever it was. They were outside of the outlining area. And they came back and said, as soon as that we can give an appraisal, because we're limited to very few appraisal, is the middle of December. So you want to be careful exactly what you do between appraisal. Anybody that you have to count on, appraisers, like the court system, just use your mind that what could create a major rate lock extension. So you want to be careful with that.
Do you communicate with the agents and all as far as I don't know how the sellers are being, because I run into scenarios all the time, right? And we recently had one, and I've had a couple kind of like this where the sellers just weren't cooperating and they literally were not closing. Like they were refusing. The buyer performed on their part, but the sellers were buying a new home, and that date kept being pushed back and back and back. So the sellers literally were not closing, to the point where we were starting to get attorneys involved to pressure them into, pushing forward. But it caused the lock to expire, and it cost the borrower money, and then the seller didn't want to pay and stuff like that. So are you running into anything like that? I deal with a lot of fun stuff.
No. It's funny how you brought that up. I have a similar situation that I am going to share. Since you brought it up, I'm going to bring it. This was me we closed the file like, I don't remember, 2-3 weeks ago, something like that. So this is a non-QM file. I submitted this file. I had to go do a DSCR loan. DSCR, you don't use income. And so I submitted it. I had majority of the stuff in the file. This buyer was 82 years old. He was very slow to give me stuff. And he went and bought the property without a pre-approval. It was given to me after the offer was accepted, and this agent was the listing agent and the buyer's agent. So I figured, okay. I'm doing with one less agent, and it's gonna be a much easier process that I was thinking, being that we have one agent with a property, she has the upper hand. Make the long story short, we had to do several extensions because the borrower was very slow in giving me documentation. So I think the offer was accepted like in July, and we closed like October, and we were supposed to close like a long time ago, like within 30 days. So I didn't want to lock the rate. So I was really good in waiting towards the end on that. So I waited for the appraisal to come back. The appraisal came out fine, and the borrower kept giving me the documentation. I kept the agent informed. I keep everything ready. I make phone calls. The sellers, I didn't know the back end. The sellers was blowing up on the agent. And so the agent called me. This might have been like, I don't know, middle of September, to, hey, Paul, the seller's saying that I'm not telling them any update. They're just making excuses. So I said, hey, I'll be more than happy to talk to the sellers. So I called the sellers, and when I got on the phone with them, I could tell their voice that they were really irritated, that they really wanted to pull out of it. They didn't want to do extensions after extensions. So I told him what was going on. The guy's in his 80s. He's buying I don't remember. I think it was like $650,000 property. It was actually on the lake in Big Bear. And he was doing, if I can remember, $200,000 down. And I told the seller, great FICO, I don't have a problem with it. It's just that he's in his 80s. And the seller or the buyer told me, hold on, have all of you heard of your dog ate your homework?
Yeah.
This situation, the buyer was keeping all of his original documentation in a storage unit that half of it burnt down. So I told it to the agent, I told it to the seller, and I was feeling like, I don't know if they're going to buy this. It's almost like the dog ate the homework. And so I was able to kind of massage the seller that, hey, I'd be more than happy to, hold you, continue to communicate with you. And they're like, yeah, sure, no problem. Within a week, the seller just didn't want to deal with the agent anymore. And then here comes the broker. Now, this real estate broker that owns a real estate company in Big Bear is from Lake Go-Ahead. He has 2 different offices. And he used to be a loan originator. And so he would text me. He didn't call me. He texted me, "Hey, Paul." He was just being direct question. I would answer his question. "When do you think this will close?" I was like, "Oh, I really hate answering this question because the way the file's been going, it's been going all over the place." So I told him something like, it could be as soon as October 2nd. And I think I might have told him, oh no, it was actually October 1st. Yeah, and worst case, I remember it. Worst case scenario, October 7th or something like that. And so the following week or the following Wednesday, again, I'm keeping everybody updated. The broker texts me. And he would start to text me 11 o'clock at night. He would start to text me 4 o'clock in the morning. And of course, I'm being nice about it. I would answer. And then he became, excuse my language, an a-hole. And I said, "Look, I'm doing the best I can. This is what's going on." I called him, and now as a lender, just learn this, okay? This could fall on you. Very easy. And he would just like threw the blame on me. "Well, you should have done this at the beginning," whatever it was. And I said, whatever the comment I said, you need to be a loan engineer, and you know how that goes. It can go either way. And then he just like blew up on me and hung up on me, whatever. And then he started blowing up my cell phone. And I'm like, oh my God, this guy's getting out of hand. This is like, I think it's this conversation that I remember before everybody got up in the house. It was like 6 o'clock in the morning. I was already irritated.
Mhm.
And then he just went on and on. He said, "I'm going to make you look bad. I'm going to tell the agent not to use you." I said, you know what? You do that, I'm going to fire it back with my attorney. I was just so irritated. I called the agent around 8 o'clock. I told her what happened. I said, "Nancy." She goes, "Paul, I know. He's a jerk. Don't worry about it. Let's just get this closed." I'm like, absolutely. So finally, we closed it. Where am I going with this? At the end, it could fall on you. Unfortunately, and you didn't do anything wrong. You stayed on top of everybody. You told them what was going on. And you even told them the dog ate the homework when it's actually something happened in the storage unit. I even helped the guy, the borrower, what he needed to do. He was having his grandson help him. And then originally, his granddaughter was going to be entitled. So this is later now. And I said, "Okay, clear to close. I need you to sign." I think it was like 2 or 3 days after that. I don't remember the exact timing. He's like, "Oh no, we have to sign tomorrow," or something like that, because she's going to Hawaii. And I said, no. We have to sign tomorrow, or whatever it was. And I couldn't make the docs happen. The mortgage company, they're like, "Nope." I tried fighting with the mortgage company to make it happen. And so what we ended up doing, I said, "Okay, Mr. Barr, this is, if you the granddaughter is not going to wait. This is what we can do. Since she's not on the loan, if she's on the title, we move her off the title." He goes, "That's a good idea." So that completely removes her out of the picture. And I told him, "You can always add her to title after you close." So we were able to close it. I was really irritated to want the loan to close. It was just one of those situations that I know wasn't my fault. I was just helping. And unfortunately, I got the rap out of it. So you're going to experience that. I rarely experience it. I think the last time I got mad at an agent was like maybe 9 years ago. I didn't want to do business with her anymore, just the way she does business. I don't know if that answers your question, Travis. I don't want to go off, but
No,
so that's
fine.
a scenario that I'm up against where I was having a hard time closing a file. But in terms of rate locking, because of the unique situation, it was a non-QM. I wanted to make sure the appraisal was signed off. The DSCR, they have a certain percentage that they have to go by in the appraisal, so the underwriter signed off of it. And I looked at the file, I'm like, okay, I think we could do a 45-day rate lock just in case if there's any additional delays on top of that. And that's what I did. And on a non-QM, there's no CD. It's just a GFE. There's no time period when it comes to it.
Yeah.
So you want to be really careful when it comes to that. And just after the story, I made sure that I'm still getting business from that agent. She loves me. She's still giving me the referrals. It's just that It's just one of those situations.
One of
Keep
those
in mind,
files, yeah.
Purchase, oh, really important. So purchase agreement, okay. You know, the RPA has its own thing, and then you have all the counter offers, whatever. Addendum, you don't want to include addendums into the file. You want to make sure that if they're going to make a change that involve the purchase agreement, that escrow creates an amendment or the agent provides the amendment from the car files. And the reason why I want to say you don't want to include addendum, if there's going to be several different addendums, like some of them might be, some agents in Big Bear, I don't know about your local area, would say, on a purchase agreement, some of the things I'm looking for is their termite. That's the number one thing, because if they disclose something about termite, it's an automatic that the underwriter is going to want to condition, they want to see that. So a lot of the agents in Big Bear, what they've been doing over the years is instead of marking termite, they've been putting that in addendum number 1. So it leaves the lender out of the picture. Tricky thing is, if there's something involved like seller to provide $5,000 towards closing costs to the buyer on addendum number 2, it's going to show number 2 at the top. The underwriter is going to condition say, okay, we need to
Where's
see
number
it.
1?
Be really careful about that, right? So if you run into a situation like, oh no, I remember Paul told me about this, what do I do? You can fix that. It's just a little complicated. Just keep that in mind.
Now the underwriter's not picking up on the little check mark saying addendum attached on the RPA.
Some agents haven't been marking that.
So how can you guarantee it's incorporated in the agreement?
When it comes to purchase agreement, that's the one thing you have to look very closely for, because that is something that could blow a deal up very easy. And the agent will come back to you, well, why didn't you tell me that? And you're like, well, it's right here on the purchase agreement. I thought you would know about it. And that was funny. It was one of the things that the broker came back to, why are they asking for the purchase agreement or the termite? And I said, it's right there in the purchase agreement. So you got to be real careful. Even if there's something in there that says, I'm trying to remember, anything to do like other terms like furnishing, like they're buying or furnishings including or something like that. The underwriter will condition back furnishing, something like no value or something of that verbiage. You know, they want you to do some kind of update of that verbiage that there's no value included when it comes to that. But yeah, you're right, Chapter. They just don't check mark that.
Yeah.
VA is like a whole different subject, but on an FHA, if somebody has a gap in employment, just in general, let's say they went from working from Walmart to, I don't know, Target 2 months later, and they have a 2-month gap. On a conventional loan, they will allow a 30-day gap without any question. If it's over 30 days, they want a letter of explanation, and then the underwriter would make a determination whether they can provide that loan. That's the income would be stable enough when it comes to that direction. FHA, however, it's actually 6 months. They will allow up to 6 months. If it's more than 30 days, they want an LOE. So you want to be careful with that. Going back to income, when it comes to overtime and bonuses, don't calculate that into your salary base. Those got to be calculated separately. And maybe at another time, we'll go kind of go through income calculations to have a separate guideline when it comes to that. VA, to hold up an animal. The certificate of eligibility, you want to make sure that's in the file. You want to make sure that's in your pre-approval before you actually use it, because there's certain information in there on the certificate of eligibility that could kill a deal. Like maybe they had a foreclosure from like 40 years ago. Honestly, they will condition for that need to be paid because VA will make you pay it. If not, the way it works, there's a certain calculation that they still might be able to get a loan without that foreclosure being paid. The only problem with VA, they have like a number. I'm just going to show a number calculation. They have this number and what's your maximum loan amount that you can borrow. If you got a foreclosure here, your borrowing power is drastically less. That's how VA works. That would be a different calculation there. If the borrower is retired or has been discharged in any given way, whether it's a good discharge or a bad discharge, they're going to want a DD 214. So without a certificate of eligibility and a DD 214, your loan's not going to go anywhere on a VA loan. Are you guys doing any MIs down here? Are you running into that? Or you're just running to people making more than 20% down payment or whatever?
We run into it.
Okay. The MI companies, a lot of them, UWM has the best MI rates. Every mortgage company has a contract with their MI company and they have better rates and stuff. So you want to pay close attention to that. Caliber, when you're quoting in their system, you actually see in they have a category when you're quoting and pricing on their MI rates. They'll give you like an estimate, $50 a month, maybe in your case, maybe $200, $300, or $400 a month. UWM, I can't remember. I think it does show up in their category as well. They're usually equal or less than Caliber. Like I said, every mortgage company is different. So you definitely want to rely, if you're going to use like Caliber, UWM, or another mortgage company, if they have a contract with an MI, you definitely want to rely on their monthly payment information because they have a special contract with them. There might be like one or two mortgage companies out there that would say, oh no, we don't have a special contract. You just go out there and use one of 5 MI companies. Then what you have to do is look at their guidelines to see what 5 that they actually use, go to the MI company's website, type in their information, print it out, put it with a file. And you want to do that at the beginning because if it's a debt income ratio that can make it or break it, you want to be real careful when it comes to that. So that is about.
You're always going to find that in the guidelines. Because we had that question come up, I don't know, about a month ago or so on shopping mortgage insurance.
That's about it for the checklist. I'm going to send this to Travis. My recommendation, when you receive this, my recommendation, just kind of like go through it. What driver's license, check it off. Or if he doesn't have a driver's license, maybe he has the military ID, check that off. Just kind of use it at the beginning. And before you know it, you're going to memorize it. Before I submit a file, I'm like, okay, do I have everything here? Everything looks good. Oh, there was an issue here I want ironed out. I'm going to make sure I get it up front. I had a borrower yesterday argue with me about 2-year tax returns. That she's like, well, this other mortgage company said I didn't need it. And I had to really explain further with her and why I needed it, how I didn't want to overpromise, underpromise, and all that get-go. So sometimes borrowers be like, oh, this is a lot of paperwork. You just want to make sure that you tell them that you want to make sure that there's no red flags at the beginning. Because 9 times out of 10, when another mortgage company tells you, oh yeah, we only need 2 years of 1099 and what did she say? Your award letter for your salary key when you were a teacher in California. That's all we need. In my brain, I'm like, I think she's missing the documentation, but it's not. I'm not going to argue with the other lender because it's not my duty. I'm not going to spend the extra time to talk about that. So just remember, you want to save your butt. You want to try to do everything up front. So that way, when it gets to the end, you're not piecing everything with the borrower. Any questions about the checklist?
No, I think the checklist is great. Does anybody else have questions about it?
Yeah, I'll send it to you in Word. So that way, if you guys want to just rearrange it somehow.
Yeah, I'll convert it to a Google Doc and I'll throw it in our back office for everyone. So it's there. It'll be in the forms section.
Cool. Becky, Andrew, Paul, and do you guys have any questions?
Am I on mute?
Paul, Oh, wait, how many policies we have in here? Just two, right? Okay.
There's one. He's on twice.
Oh, one other
for some
policy. Okay,
reason.
there you go.
Well, I
Yeah.
guess technically there's two, but we've started referring to you guys as New Paul and Old Paul.
Oh, there you go.
So,
So yeah, so this would definitely help your processor a lot. So when your processor gets that, she's going to see, oh yeah, I have majority of everything. I'm going to push the file or register the loan to the underwriter and push it over through. Yeah, so this is one of the number one thing that the industry is having an issue with. So if I was the processor, if I decided to go into processing, I would give them this. And if I saw like several different messy files, honestly, because I've been in the industry over 17 years, I'm going to say, you need to clean it or I'm not going to want to work with you. I would say it in such a nice way and communicate it that way. And this should not be an issue because this is all general stuff.
yeah. Cool. Well, we'll get this posted up, start using it, and then yeah, I really appreciate your time. This was a really informative webinar session. So, and then I'll send out the replay for everyone too, because I know Dean wasn't able to make it, but he definitely wanted to be on, but he had another training session he had to be on.
Cool.
So, he usually has a lot of questions. So,
All right.
cool.
So
Well,
no other questions. It was great being here. I will see you guys next time.
yep. Thanks a lot. We'll see you guys. Have a good week.
Bye.